everyone. Welcome to your latest Carson's Take 5. Ryan and Sonu here. Sonu, there's a lot of news, there's a lot of fear with the uncertainty and the volatility that we're seeing in the Middle East. This week on the Take 5, we are going to talk about that, the latest on the war in the Middle East. But before I go there, do you know where I am right now?
I don't want to guess, but tell us.
I'm literally in the bathroom for a dog at the Baton Rouge airport. So it's listen, we travel, we get busy, we got to do these videos. This is a place that no one's here yet. It will be funny if a dog walks in and actually uses this bathroom for a second. Yeah. It does have a certain odor in this bathroom, so we're just going to leave it at that. We're going to get this done because this is important. I mean, so let's start high level. There's a lot of uncertainty and a lot of fear of what's going on with the Middle East, which seemingly continues to escalate. We are recording this. What's today's day? It's Wednesday. What is today?
June 18th.
Okay.
Wednesday.
So June 18th, we're recording this in the morning. But what's the latest on the war in the Middle East as of Wednesday morning?
Look, last Thursday evening, our time, close to about 6 days ago was when Israel hit Iran. And then we saw the usual reaction from markets. Markets pulled back. Oil prices went up. We can talk about oil prices being a little bit of a risk factor here. And then Iran retaliated, right? This was Friday afternoon, our time. And then markets are starting to recover and then pull back again. But long and short of it is we have more volatility. Look, I'm not a geopolitical expert, but I don't think anybody knows what happens next. Because it all depends on, is the U.S. going to be pulled into the war? How does Iran retaliate? Do they try to find some way out of this? Because they're in pretty bad shape. They've been beaten up pretty hard, right? Yeah. But at the same time, they're not down and out. And then this could drag on, right? Back in 1980, after the Shah of Iran was, deposed, they lost all their top military brass. And then that's when Saddam Hussein, if you remember him from Iraq, attacked Iran thinking, Iran's weak now. But guess what? That war raged for 8 years. So things can go on for a long time and just remain boiling just under the surface, right? But that does not mean markets will continue to go down, right, Ryan? I mean, you've looked historically, we've gone through a lot of geopolitical shocks, events like this, and markets have recovered, right?
They have, it's interesting. You mentioned the 80s. I mean, how did the stock market do in the U.S. in the 80s? Pretty good. As terrible as October 7th was when Hamas attacked Israel. I mean, obviously stocks have done well since then. I mean, Israel's stock market last week was hitting all-time highs. I mean, so we're not minimizing at all the destruction and death and the things that are happening in the Middle East, especially in the United States. It's more kind of pulled into it, which nobody wants. So we'll just have to continue to follow. But the reality is we've had turmoil in the Middle East before. I mean, unfortunately, it's kind of how that region it can be a lot of times. And U.S. markets can hang in there. We've seen that. I mean, I took a look at back to World War II, like 40 different major geopolitical events. Yes, some of them pushed us into recession, like World Wars and 9/11 and things. But a lot of the other ones caused some short-term volatility. And then you look back 6 months later, a year later, if the economy was strong, and we think the economy is weakening a little bit, but we still don't see a recession, maybe a little stronger economy second half of this year, then you can look up and say, from an investments point of view, this was something not to get too scared of, definitely not something to sell and panic on, and maybe just continue to follow your investment process. What else you want to add to that?
No, I think to your point, context is important, right? If we have something like this happen when the economy is really weak, yes, we could be tipped over into recession. That's what 9/11 did, right? We had the dot-com crash, and that extended the dot-com crash into its third year, right? And then Russia's invasion of Ukraine, we already had inflation on the boil, and that tipped inflation into the highest levels we saw in 40 years. This is back in 2022, a little closer to home right now, right? Got a bear market in stocks because bonds are failing to provide diversification as the Fed was raising interest rates. Risk here is, could oil prices go up? But at the same time, look, OPEC has plenty of capacity. Imagine the pressure from the Trump administration to the Saudis to say you need to ramp up production, and you have capacity to do that. U.S. shale, right? $70 a barrel for WTI oil, West Texas Intermediate, is uncomfortable for those of us who have to fill gas at the pump. But that's not bad for U.S. shale. So U.S. shale will be like, wait a minute, we are going to boost production because now we can make more profits, right? And I think ultimately, going to what you said about, markets getting past volatile events like this, is that the profit motive, right? American companies are dynamic. American entrepreneurs are dynamic. And ultimately, I think that's what gets us through this, gets markets through this, right? Irrespective of, it's a tragic situation, lost lives, all of that, right? But then our focus is on stocks and markets and things like that. And this is also why you have a diversified portfolio,
I
right?
was going to chime in
And that's
there.
what we talked about this year.
Yeah, I was going to chime in. What we said this year, right? When in doubt, diversify it out. U.S. stocks, by the time we're doing this, up a little bit on the year. But the reality is global markets have done well. Bonds have hung in there. Gold, commodities, you mentioned oil. So there's a reason cash is doing just fine. Obviously, there's a reason to have a diversified portfolio. And in this uncertain world, that's something to think about. One other thing to think about. In U.S., right, S&P 500, we just had, Sonu, one of the quickest 20% rallies ever. Off those April 8th lows, within a couple months, we're up 20%. Again, maybe we're due for some late June volatility. If you look at the calendar historically, June, they call it the June swoon. Late June can be weak. Now, we get it. There's headlines why we're seeing this volatility weakness. But after a 20% rally, maybe we're due for just a little consolidation pullback. Would be perfectly normal, from a structural market point of view, to catch its breath. But so it looks like we're about out at the end of time. And honestly, it smells in here, so I'm ready to get out of the dog's bathroom. Any final comments from you?
Look, volatility is normal, chaos is normal, but that's why you have a diversified portfolio, because that sets you up to ride that volatility without panicking, right? Yes, what's happening in the Middle East is not ideal, things like that, but markets get beyond this, look past it, but that's why our portfolios are built to withstand that.
Absolutely. So everyone, again, we're where the headlines are scary, risks are high, volatility's elevated. We're going to continue to do these weekly Take 5 videos and talk about it all. We appreciate everyone listening to it. With all that, we'll see everybody next week. Maybe we have, who knows, maybe we'll have better news. Let's just have a glass half full mentality. Maybe we have some better news in the Middle East to talk about next week. But if not, everybody enjoy it. It's summertime. It's nice weather out there, so enjoy. We'll see everybody very soon. Thank you. Take care.
Stop.